Hello everyone, welcome to my YouTube channel. My name is Tabiso Rantsiye. Today I'm going to be your tutor with accounting for grade 12. Today we are going to study like yeah, we are going to bring that womb like yeah. So the main motive behind this topic today is because we have been going through a lot. We've been suffering in this pandemic. So now I decided that I can share my knowledge with you guys, my learners, my best learners. You have the best teacher here. So let's get to the point. Rakelezano. So today's main topic is all about the introduction and basic concept and unique transactions related to companies. Before studying this module, you should have a clear understanding of grade 10 and grade 11 work related to sole traders, partnership with regard to accounting equation, gaps, principles, year-ended procedures, year-ended adjustment, closing transfers, and different types of trial balance. Today's study outcomes are as follows. After engaging with all the materials and activities in this unit, you should be able to define and explain accounting concept unique to companies. Companies such as public, private, and the Companies Act. Registration of companies and registration certificate. Memorandum of incorporation, income tax or provisional income tax. Dividends, shares, earnings, and issue price. So let's get to the point. Explanation of concept related to companies. A company, it must be registered in terms of Companies Act, has a legal personality of its own. This means that in the eyes of law, a company is regarded as a legal person. For example, on its own, it can enter into contracts, it can institute legal proceeding its own name, and it can be sued and it can sue because of the misleading information within the company. And then we have directors. The directors of the company are mainly the means whereby the company can facilitate the exercising of its legal personality. The directors, in effect, serve as eyes, ears, arms, and legs and brain of the business, of the company. So, the directors do not enter into contracts in their personal capacity. They act on behalf of the company. So they help the company, they monitor the company, the progress of the company. That's why we say at the end of the day, they act on behalf of the company. And then the legal person of the company has the following implications, such as what? Memorandum of incorporation. Memorandum of incorporation is what? It's a document that requires a business, a company to have. It sets out the basic rules on how the business it must be ran. And then we have share and shareholders. Guys, when you have a business, what you must know that in the business, in the company, you must have shares in order to become a shareholder. For example, even you at home sitting there as my learner, you can become a shareholder. You can become an investor. You may go to JSE. We have JSE, which is Johannesburg Stock Exchange. And then you will find a broker there, and then it will explain to you like which company is doing well and which company is not doing well. So you can become an investor in that company because of it's doing well. And then at the end of the day, you own that minimum of shares in the business. Okay, what is a shareholder? A shareholder are the owners of the business, of the company. They provide capital They provide money in the business. They invest money in the company. Because they can be numerous owners of the company, the capital is divided into shares. Mr. Ramaphosa, maybe he will decide to buy certain number of shares, and then Mr. Thabo Mbeki will come again, decide to buy certain number of shares. That's why we divide the number of shares in the company. And then at the end of the day, that money you are using to buy shares, it will be regarded as what? As an issue price. That is a keyword, guys. When you get your grade 12 class, you must know that keyword. It's what? It's an issue price. One day, they will give it, like, for example, they will say, Mr. Thabiso issued 20,000 units of shares. For how much? For 3 rand per share. Because of that word, issue, that keyword, issue, it's an issue price. I took out my money and bought those shares. It's what? It's an issue price. And then we have directors. Now I'm a shareholder in the company. I want to become a director. All the shareholders, all the investors in the company, they will have what we call an annual general meeting, which is abbreviated as what? AGM, annual general meeting, whereby all the shareholders will come and sit down and select, appoint their directors, those ones who act on behalf of the company. The directors are required to run a company to their best ability in return of what? Directors' fees. They earn directors' fees. They do not earn auditors' fees or whatever, but they earn what? Directors' fees for their best ability in the company. And then, guys, we have continuity. A company has the capacity to have its own rights and duties and indefined existence apart from its owners, who are called shareholders or members. A company will continue even if one member withdraws or one member dies. The company will continue. But when it comes to sole trader is owned by only one person. So whenever the owner of the sole trader withdraws or dies, the business dies as well. And then we come to partnership. Partners, we have minimum of 2 partners and maximum of 20 partners in the business. So whenever one partner dies or withdraws, it's no longer partnership. The business dies. There is no continuity for sole trader and partnership. But company is regarded as a legal person on its own. It can continue even though shareholders withdraw in the company. And then we have the asset of the business. There won't be a company without asset. That will never happen, guys. As a company, we need vehicles. We need land and buildings. We need equipment so that our company can function accordingly. So, a company acquires assets on its own name and in its own rights. The assets are exclusive property of the company and do not belong to shareholders. Those vehicles, those land and buildings, those equipment, computers, those tables, they do not belong to shareholders, but they belong to the company. The company is entitled to its assets. Am I clear, guys? Okay. On the liquidation of the company, the shareholders share in the division of assets. In the case of sole proprietorship, and the proprietorship is the sole owner of the asset of his business, while in the partnership, the partners are the joint owners of the partnership, meaning that the sole trader, all the assets, they belong to its owner. It's not the same as the company, but all the assets, all those cars, all those land and buildings, equipment, they belong to the owner. As what? As a sole proprietorship. And then When it comes to partnership, all those assets, all those equipment, land and building, they belong to partners. But it's different when it comes to companies. Guys, what you must bear in mind is that when it comes to grade 12, it's all about companies. Do not involve sole proprietorship or partnership in your grade 12 class. You only focus on companies, because that's why I said before you study this module, you must be related to grade 10 and grade 11's work. Grade 10, we deal with sole traders. Grade 11, it's partnership. And then grade 12, it's our conclusion whereby we talk about companies. So the main focus here is companies, the buying back of shares and the buying of shares at the end of the day. I hope I'm clear, guys. And then, guys, we have liability for debts of a company. Liability of the company. What is the liability, guys? Whenever a company owns someone, it's a liability. We owe some money to our creditors. We took loans from FNB, we took loans from Standard Bank. So at the end of the day, we have a liability in the business. At the end of the day, it must be paid. That's why we say at the end of the day, the company is held liable for its liabilities, not shareholders. And then the ability to enter into contracts, guys. As we have said that the company is the legal person. No shareholder can draft a contract and then enter the contract on the behalf of the company. But in general, the company is the only legal person who is able to do what? To draft the contract and then agree on certain stuff, working with its own directors. Am I clear, guys? Yes. A company has an independent contractual liability, which means that it can do business with other legal personalities, including businesses with the shareholders. Only the directors who are appointed as a representative of the company in accordance with the Memorandum of Incorporation. Still remember, Memorandum of Incorporation is what? It's a document that sets out the basic rules on how the business must be ran. Or staff members with delegated authority, it can act on the behalf of the company. There is complete separation of control. Management by directors from ownership by shareholders or members of the company. There is a separate control within our staff members, our shareholders and directors. Company is on its own. Independent auditors. Guys, now we have a business. Our business is doing well. But as shareholders, we are not sure what's going on in the business. Like our financial statements, all the figures are reliable as the directors are saying that. Because sometimes they may be some leading information whereby the company generated 2 million within the financial year, and then our directors, they said that the company generated 1 million instead of saying it generated how much? 2 million. So now it's whereby we involve our independent auditors. We employ our independent auditors because we want them to do what? To check the books so that they can express their own opinion regarding the figures of the company. They can express an opinion in terms of what? Of disclaimer. They can express an opinion in terms of what? Qualified audit report. They can express an opinion in terms of unqualified report. We will look on those topics in the next session. But for now, we must know what is responsible for independent auditors. They are here in our business to check that all the figures are reliable to our financial statement. No misleading figures in the business in order to avoid what? Frauds. Am I clear, guys? Okay. And then we have sharing of profits. Now our business is doing well. The motive was to do what? To make profit. Like there is no company that wish to to experience losses in the business. But all the companies, the main motive is to do what? Is to make profit at the end of the day. But now we have profits. We must share our profits. How are we going to share our profits as a business? Mr. Rantier invested 40% in the business. Mr. Ramaphosa invested 3% in the business. At the end of the day, all the profits will be shared according to our investments in the business. And those investment and those profit to shareholders will be regarded as what? As dividends, guys. You must know we have what? Dividends. We have final dividends, we have interims. Shareholders will get paid in the middle of the financial year, which will be regarded as what? As interims. And then at the end of the financial year, we declare them, and then they will be regarded as what? As final dividends. We are paying out because of we made profit in the business. The profit and loss that the company makes are for the company's own account. They belong to the company, not the shareholders. Shareholders will be entitled to a share of profit after the company distributed dividends, which is interim and final, to its shareholders, or when the company decides to buy back shares from shareholders. Whenever the company buys back shares from its shareholders, that's where the shareholders will be entitled to the profit. Am I clear? And then we have income tax. Because a company is a legal person, each company will be a separate income tax entity in its own right. Companies earning a profit will have to pay income tax entity in its own right. Companies earning a profit will have to pay income tax to SARS. Guys, companies must pay income tax to SARS. And whenever they pay income tax, they pay it twice. In the middle of the financial year and then at the end of the financial year. And sometimes it might happen that we underpaid SARS. So whenever we underpaid SARS as a company, we have to pay again to SARS. Or we overpaid to SARS, the SARS will refund us our money back. So each and every business must comply, must register in terms of SARS. It must be able to pay tax, guys. Am I clear? Registration of a company. All companies must be registered with Companies Commission, known as the Companies and Intellectual Properties Commission. In the past, registration was done with the Register of Companies. So your company, like, you won't have a company if you are not registered in terms of companies and intellectual properties. In order to have a company, you must first be registered with Companies Act, guys. And then the company name. Because we have said that the company on its own is a legal person, we cannot share the same name as a company. And a company must have a unique name. The last words in the company must be limited, which is abbreviated as LTD. It's limited. So guys, go to your ledger account. You must know that we are dealing with companies here, guys. And then when you know and then you have that knowledge, you will be able to record your ledger account and read different transactions of companies. So those ledger accounts we are going to deal with, it will be ordinary share capital, whereby we buy shares and then we issue shares at the end of the day, and then retain income. What did we retain from our buying of shares in the company? And then shareholders for dividends. After we have made a profit, how did we distribute our profits to our shareholders at the end of the day? So I thank you, guys. Please, if ever you have more questions, any questions, please comment down there. I will answer your questions, and then in my social media platform, I will show you a link there. So